Since 1928, the month of September has been the worst month for the stock market. And last I checked, September comes every single year and it is right around the corner. So what should we do about September this year as investors? Why does this happen? And what should you do with your portfolio this time around? Let's go ahead and break it down. So the first thing is this. It's right around the corner. There's nothing we can do about the calendar, but there is something you can do about your portfolio. The question is, should you? But first, let's talk about September itself. Why is it the worst month for investors? The first thing is, it's just bad luck. Okay, some of it is just bad luck. And this is an average, okay? It is the only month on average that is negative for returns. That is crazy to think about, but again, it's bad luck. So for example, when you look at some of the worst events when it comes to stock market history, the Lehman Brothers crash happened in September. That's going to bring down your returns. One of the worst crises when it comes to the stock market. When you think about the worst crashes, 2008 is one of the ones that we all go to from our lifetime, okay? And then when you talk about, again, disasters and crashes, 9/11, 2001, that's a part of the dot-com bust, was during that period. September. Just bad luck. Okay, so that's two of the crashes in my lifetime. This does not include the coronavirus that wasn't in September, but 2 out of the 3 or 4 crashes in my lifetime alone started in some part in September. That's just bad luck, okay? But there is something called the September effect, which does happen on an annual basis, according to most researchers, and it just makes sense, okay? So here is what most people are pointing to. There is, and we've talked about this years and years ago, but there is an axiom on Wall Street that says, sell in May and go away. And that is because most financial advisors and accountants and institutional investors, but people on Wall Street, they go summering in Martha's Vineyard and go nice places during the summer. And that's because people like you and their clients and people want to go out and have fun. Kids are on vacation. You do not want to sit in a stuffy office. I've known financial advisors that will close their office during the summer because they don't have clients. Clients don't want to talk to them during the summer, and it makes sense. You don't want to talk to nobody in a suit and tie and talk about money when it's hot outside and you should be having fun spending that money, right? So they leave the office during the summer, and this was, primarily before phones and notifications, all that kind of stuff. But the basis is they leave. They're not really paying attention to the stock market. But when September comes and it's time to bring the kids back to school, you come back to the office, you come back to the computer, and you're back looking at things every single day. You realize it's some moving and some shaking that has happened in the market. Things need to change, and there's a lot of buying and selling. There's a lot of volatility. That is what the September effect is primarily about, and that's one reason why the market is down. So that is the primary reason why most people point to that. Now, a part of that, this is a secondary reason, is because that is the primary narrative. There aren't a ton of studies that confirm that as a true thing, but because that's a narrative, like you can Google the September effect, and there are tons of articles that talk about it. You don't see a ton of studies and data that confirm it. But again, because that's the narrative, you have people saying, okay, well, in my mind, the September effect is here, so I'm selling to prepare for that. So that becomes a self-fulfilling prophecy, right? And you are selling because you know or think someone is going to sell. So then you sell on top of people selling. And then again, you get the self-fulfilling prophecy. You get this loop of people selling because you think somebody else is going to sell, which causes someone else to sell. And then people are selling off in September, all because of that, right? So that is a good cause, right? Or a good proof, I guess, of why people start to sell in September. Now, the other reason, and this does happen, is it is a quarter end period. And we do start to see this as well. But anytime that you get a hard stop when it comes to the end of the calendar, you do start to see, especially institutional investors, start to either A, rebalance, or also pay taxes and a bunch of other bills. Also, for institutional investors and some of these larger clients that they do have, remember, when it comes to institutional investors, we're talking the Vanguards, the BlackRocks, but also these millionaire clients, right? And when they sell, these are people who have tens of billions of dollars, hundreds of millions of dollars. They do move the market. When they buy or sell, it sends shockwaves throughout the entire stock market. Sometimes we talk about it here because sometimes when they buy, we buy, right? And that kind of, what's this phrase? A rising tide lifts all boats, right? That can help us, right? But when they buy and sell because at the end of the quarter, or they sell to pay a tax bill because they pay taxes on a quarterly basis, well, what's going to happen? That is something that is going to shake up the stock market as well, because again, major businesses sometimes will pay those taxes on a quarterly basis, and they can sell at the end of September, which again can shake up the stock market as well. Or they can sell during, let's say, the second week of September or something like that to pay it by the end of September. Now, this last reason is one I found that was interesting. Again, there wasn't a whole ton of data on this, but also rich people be sending their kids to boarding school. Boarding school is expensive. When you get back from summering in your nice vacation home or your yacht, but you come back, you realize what's going on, you start to sell some of your stocks to pay for those expenses. And we've also talked about this before. I think it was Warren Buffett, Jeff Bezos, and some other CEOs. Jeff is not the current CEO of Amazon, but we did talk about, I think it was Jamie Dimon and others, who had sold shares to we don't know what, right? But it could have been out of panic, it could have been taking profits, it could have been to buy a yacht, right? But that is a thing too. It could be paying for certain expenses. It could also be a tax expense, which I mentioned earlier. But end of quarter, they could be just coming back and paying for the vacation that they just came off of, because it could be putting everything on credit card. I just got back to the office from a summer vacation. I'm going to pay for this with X stock or what have you, and just do it that way. That could also be an impact. The question is now, if these are reasons, right, why people are selling, because the biggest investors are liquidating some of their funds to pay for X, Y, and Z, and that is a reason for sell-off, and people are expecting that and starting to sell stocks in September, what should you do as an investor? Most of you, I think, know the answer, and you really have two routes, and the routes have not changed. Either A, do nothing. Okay, just do nothing. You don't have to sell. You can just continue holding, because what we do know from history, September ain't great. October, not a whole bunch better, but we do see December, January, February, and so on, the market tends to do well. So you just hold for the long term and you tend to be fine. You could do that. That historically has worked. Just do that, right? So that is an option for you. Or you can continue buying and doing the whole dollar cost average strategy. That's what I'm going to do, because again, the whole buy low, sell high strategy still works. So if I'm consistently, let's say, investing $1,000 a month, I am going to by default buy more shares in September, only because the stock market will just happen to be lower. If it is lower. Again, that is an average. That's not a guarantee that September is going to be a crash, or that's going to be down at all. Just because it tends to be the worst month doesn't necessarily mean it's going to be negative. So keep that in mind as well. If the stock market is up 50%, right? Let's just say that one was only up 5, right? And the rest of the stock market or the rest of the month were up double digits. Okay. But that is a thing. So keep that in mind as well. But those are your two options. Continue $2 cost average and put in whatever your budget allows every single month. That is a good, solid, time-tested strategy. Or do nothing. Another good, solid, time-tested strategy for the long term. Because I think that is your best path for success, again, for the long term. What tends not to work is you trying to sell at the end of August, right? Wait for September to pass and invest in October, which I would not recommend, because again, October also had Black Monday. October also had a lot of dark days, which, ain't always that good either. And then you also got an election in November. We don't know how that's going to play out. So what you could do is end up scaring yourself out of not investing at all until, January 1 of 2025. And you could either miss out on what could be a bull run. We don't know, right? You could just be sitting on the sidelines, either missing what could go quite well or sitting out on what could be some great discounts. You don't know what is going to happen, but we do know, again, over the long term, it usually makes sense to either hold or continue investing. So those are really the two best routes if you ask me. So September could be rough. I would just take it and anticipate it being rough. If it's not, great. I would prefer it to not be rough. Okay, that's what I would prefer. Now, the time that you're watching this, August, the first few days has been crazy. By the time you watch this, I don't know what's gonna happen. Okay, I ain't got a crystal ball. I would prefer August and the rest of this year to be great because the first, 60% of this year has been great. I would prefer it to continue to go that way. Okay, I would want to end the year with a double-digit return. Okay, for the S&P 500. But if it's not, my strategy does not change. The same way I've become successful to this point is going to be the same way I'm going to be successful in 25, 26, so on and so forth. But the thing is, for those who are new and for those who have gotten to this point, and for those who are millionaires and beyond, they will tell you the exact same thing. This is how they got there, by staying extremely consistent. So you have to stay extremely consistent regardless of what the calendar says and what the headlines say and what the news says. So your job is to stay consistent. If you want to know more about what investing habits you should have, what are the things that I do as an investor to keep me on track and have all the right habits, these are the videos that you want to watch next.